Welcome back again. Today we want to look at financial accounting and preparation of financial statements for non-for-profit. Now, non-for-profit organizations are like NGOs. Some people call them NGOs. But for accounting purposes, for financial accounting purposes, is how these organizations work. Okay, is how these organizations work. Now, for financial accounting exam purposes and also for our learning, these non-for-profit are usually like they could be charity organization, they could be associations. For example, it's a football association, maybe it's a parents association, or it's an alumni association, and so on. Now, these non-for-profit organizations usually, yes, schools as well. Some schools are non-for-profit, some schools are actually for profit, but there are also hospitals that are also non-for-profit. So we have several examples, okay? We do have the several examples. Now, most of these organizations, because they are non-for-profit, they're not started for profit purposes. So the owners or the members are not in them to generate profit, but they are there to, of course, provide a service for charity, but also maybe to create positive change in community. So for example, we have an example here for this question. This is Mama Kabete organization, and it's a children's home. Okay. Now, because they are not created for profit, they have how they prepare their financial statements a bit different from a generic business. Okay. Now, where we have the cash book, and you know, a cash book is usually for profit entities. Where you have a cash book for profit entities, non-for-profit, we call it a receipts and payments account. We usually call it a receipts and payments account. We know the cash book records cash coming in on the debit side and cash going out on the credit side. The same thing with the non-for-profit. The receipt side records what is coming in. For example, we've received money from donors. We've received money from campaigns. Like, for example, or you have done, let's say, maybe a marathon and you've received some money, or you have received money from members. All that is recorded under receipts. And then payments, definitely, we understand that such an entity will have payments. So this is how a payments, receipt and payments account looks like. Very similar to a cash book, but for it, it's called a receipts and payments account. Now, the receipts and payments account does also not have like 2 columns, 3 columns. It's usually a single column, okay? It's usually a single column. And one thing that you also realize is that it also has balance brought down. This balance brought down is usually the money on, let's say, on your bank account. And it could also include the money also in cash. Maybe you deal in cash, you don't have a bank account. So it usually has a balance brought down, what you're starting with, okay? And then it usually also has a balance carried down of what you've remained with. Like I told you that the receipt side is receiving money that is coming in. As we can see, we have volunteers' contributions coming through. We have cash sales coming through. We have cash from accounts receivable. We have membership fees. We have grants income, and so on. Now, when you see the thing called cash sales, you should be curious to ask yourself and say, this is a non-for-profit. Then, are they making sales? Now, it is very common for non-for-profit for them to get an income generating project. Now, if it's, for example, a children's home, we can see that they are also running a bookshop as a business. Now, these businesses that they do start are to help them meet their costs. Them not being for profit doesn't mean they don't have expenses. They also have expenses that they have to pay for. So they also need to basically be able to run a business on the side. Now, this business in accounting, we take it as more of like the way would handle a private business. And you're going to see even when we are preparing financial statements for it, for the bookshop in this case, you'll see how that comes through. So we've seen how the receipts and payments account looks like, and then the payments, as you can see, whatever is paid out, utilities, bookshop adverts, insurance, stationery, and so on. Anything that is to do with money moving out is actually on this side. So that is what happens in terms of the differences between the profit and non-for-profit. Now, similarly, we have what we call the profit and loss account, profit or loss account. Sometimes you might also call it income statement, okay? You can also call this income statement. So for businesses that are private in nature, we have the income statements or profit or loss accounts. Now, for non-for-profit, we have what we call income and expenditure account. We have income and expenditure account. Now, we know that profit loss account definitely looks at your revenue and then goes to look at your expenses and then gives you profit. Are we together? Now, for income and expenditure, in this case, we'll have incomes, we will have our expenditure, and then the next thing that we'll have is a deficit. We will have a deficit or surplus, okay? Or surplus. Sometimes they may call it income over expenditure, excess of income over expenditure. Are we together? But the surplus and deficit can also work. So that is one of the other differences between the profit and non-for-profit. Now, in the same way, where you have for-profit businesses, where we have what we call capital. In this case, we call it accumulated fund. Here we call it accumulated fund, okay? The other is in terms of differences. Now, like I said, non-for-profit, although they're non-for-profit, they will always have a profit business. Most of the questions that will come through will have a profit business. Now, what happens is we do prepare a trading account, okay, for the profit business. We prepare a trading account for the profit business. Of course, the P and slash P and L for the profit business to determine the profits from that business. So now this profit is taken to the income and expenditure account to under incomes. So for non-for-profit, definitely under incomes, you have things like donations, you have things like membership fees, you have now you bring your profit from, let's say, bookshop. Your profit from bookshop will be something like here. Okay. So, and that means that we have to first calculate the profit from the bookshop before we draw up the income and expenditure. So we have to first draw up our trading account. Okay. Yeah. With many others, other differences that we are going to see even as we proceed forward. So if this is our receipts and payments account, let's just go through this question to see how it relates, and I'll be able to explain more aspects even as we proceed. The balance sheet is the same. Okay, the balance sheet is the same. The statement of financial position cuts across all the entities, either non-for-profit or for-profit, can have a balance sheet. So let's say the organization runs a bookshop to supplement its income. The following information was extracted from the organization's receipts and payments account for the year ended 31st December 2021. So we have receipts and then we have the payments. So like I said, members can contribute their volunteers contributions. Like a volunteer may not be maybe even directly in the organization, but they can contribute. They can contribute to the organization. Cash sales. Now, since they have told us that they run a bookshop, we know that these cash sales relate to the bookshop. Cash from accounts accounts receivable. We again know that this is also due to the bookshop. Then we have membership fees, like members contribute to the non-for-profit. And then we have grants income. This might come from like a donor, either government or some donations from some international organization. Then we have investment income. Investment income, them being a non-for-profit, they can invest some money maybe in treasury bills. Maybe they have received a lot of money from, let's say, from maybe a donor. They don't want to use that money right now. They can invest it in an investment arm like a treasury bills, and they benefit from it. Sometimes they can also put this money on fixed deposit and they can receive interest from the bank. That is also investment income. Then they have entrance fees. As you can see, this non-for-profit can hold events, okay, maybe fundraising events or even normal events, and then they can charge people for entering. And like we are saying that all these profit activities that are conducted are to help them generate money that can help them run sustainably, okay? For them not to just depend on handouts and donations, but they can still be able to survive. Then ground rent, of course, they are paying ground rent. They also have staff salaries and wages. They have transport, they have purchases. Now, again, these purchases are related to the bookshop, because remember what I talked about purchases? I said purchases are items that are bought for resale. So that is good to note. Then we have payments to accounts payables. This is also very similar to the bookshop as well. Then we have utilities. We have office expenses. We have bookshop adverts. We have insurance. We have club, printing, and stationery. Then we have refunds to accounts receivable and so on. Now, it's very important that when you're looking at your receipts and payments, you're able to identify which items relate to the bookshop and which items would relate to the overall organization, which is Mama Kabete Children's Home. So that is important. Now, we come to the additional information, and I want you to see they're telling us that management apportions expenses between Mama Kabete Children's Home and the bookshop as follows. They're telling us that the expense is salary and wages, 80%, and then they are putting a question mark. Now, I want to first come here. Remember the salaries and wages we saw here? These salaries and wages of 6,200 are relating to both the bookshop and the children's home. And remember, we know that the children's home owns the bookshop. But for reasons of financial accounting, we separate these expenses. Why? Because we will prepare a profit and loss for the bookshop separately, and then just get the profit from the bookshop and bring it to the income and expenditure, which is for the overall children's home. So with that understanding, what this means is that if my salary and wages for the children's home are 80%, and remember the distribution is just between Mama Kabete and bookshop, means that the percentage here is 20% for it to make 100%. So it's very important for you to know. So this is 20%. So the bookshop has 20%. That is it. So if I'm just computing, you can be able to compute 80% times the 6,200, okay? And then 20% times the 6,200 to determine the values. The same thing with utilities. They have put 60%, means that this one will have 40%. Office expenses, this one has 70%, means that this one will have 30%. That is where there is a question mark. They have even given you an example here. You can see for transport, here there is 20%, then here there is 80%. So when you add the two things, they actually give you 100%. Now, they proceed to tell us, now this is where the dynamics are also now coming through. They're telling us that 20% of the membership fees received relates to a long-term period. Now, one of the common things with non-for-profit is that their membership fees, some of them are annual membership fees, some of them we call them lifetime membership fees or long-term membership fees. Now, what this means is that the annual fees will be recognized in full for the year, while the lifetime membership fees are recognized as and when each year ends. So for example, if you have some membership fees for 10 years, every year you will be recognizing a portion for 10 years for each of that membership fees for respectively for 10 years. Then the balance will be more of like a liability, because it's more of like members paid in advance, okay, for the next period. So that is good to note. And they have also given us that management has decided to amortize this portion of management fees over a period of 10 years. So it means that you get the 20%, divide it by 10 years. Okay, I'm saying 20% of what you have 80,000. 20% of 80,000 is 16, I think 16,000. So the 16,000 is divided by 10 years. Now, when you divide by 10 years, means that you have 1,600 for every year. So it means that you're going to be recognizing 1,600 every year. And the balance, for example, for this year, we shall recognize 1,600. The balance will be under your liabilities. It's more of like income received in advance. Just like if what we have been doing for normal private business, this will be more of like income that was received in advance. So that is good to note. Now, they do proceed to tell us that depreciation expense for the year ended 31st December was as follows. Again, like I told you, the things that we have been learning for private businesses also cut across to non-for-profit. They also cut across to manufacturing companies. So depreciation is not even different. We are going to handle it in the same way. As you can see, they have given us the different vehicles and they have given us the depreciation expense. Now here they have helped us in a way that they have not given us percentages to calculate depreciation. They have already computed the depreciation for us, which is okay. But in case they gave you depreciation percentages and they gave you, let's say, cost amounts and maybe net book values and so on, you definitely be asked to either use straight line depreciation or reducing balance, which I do believe that by this time you should really have abilities of how to compute those respectively. Then we have this they are saying, it is management's policy to apportion 15% of each depreciation to the bookshop. So it means that when I'm doing the profit and loss for the bookshop, I'll come and get 15% of this depreciation, 15% of this depreciation, 15% of this depreciation. That is what I'm going to do. And then I have now this information. They are telling me other balances are as follows. They are telling me that accounts receivable, my opening balance is 31,500. Well, my closing is that value. Accounts receivable, inventory, prepaid utilities, accrued utilities. I do believe that you know accounts receivable, very similar to debtors. Accounts payable, you also know them. Credit suppliers. Inventory. Now, inventory, you know that this inventory relates to the bookshop, okay? Relates to the bookshop. Prepaid utilities, these are basically utilities that you have paid in advance, okay? Utilities are expenses, so they are more of like expenses paid in advance. So we know that prepaid utilities are current assets. Even in this case, they also happen. So all these terms, the way they are, this general accounting, the knowledge cuts across all these entities. Accrued utilities, these are usually utilities that you've not been invoiced for. You have incurred them, but you've not paid the bills. Okay, so you accrue for them. Accrued office expenses, very similar. Now, you're seeing this short-term membership fees paid. Now, this means that some members paid in advance for their fees. Okay, they paid in advance for their fees, so which is okay. Some of you are students of ISPA or CPA, and you have cases where you pay in advance your membership fees or subscription fees. So it's also common with this. Now, why they give you these balances is every time members pay in advance, then you know that those are actually prepaid membership fees are liabilities. Why members have not utilized that kind of membership that they have paid. It's only when the period has elapsed that we now recognize them as income, okay? We know that membership fees here is income to the non-for-profit. Then we have what we call short-term membership fees accrued. Usually, sometimes for some questions, the examiner, instead of using short-term membership fees, they call it subscription fees. So just take note of those differences or similarities. So accrued, these are members who have not paid, and means that they will pay after. But for you as a business, as a non-for-profit, you want to recognize this income because these are members. It's just like you're a member, you're a student of CPA. So you already attached to the institute. So you have to pay this membership, okay? So if you finished a year and you're already a member, we know that those fees, you'll pay them in the next year. So we have to recognize them. And that is what we call accruing them. They have also given us the motor vehicle at book value, and they have put question marks here. Now, what this means is that, remember, this is the start of the year, 1st January. These are net book values because I've told you these are balances. So if motor vehicle at book value was 112, what would its value be here? It is just basically this value minus the depreciation for the period. Which depreciation they gave us? They gave us this information. They have told us that motor vehicle depreciated 37,500 for the period between for their ending 31st December 2021. So you can easily be able to capture that. They have also told us equipment, the same thing. They have also given us that. Furniture, they have also told us, okay? You can see here, motor vehicle, equipment, furniture, they have given us. Now, the examiner is very bright. They have also put land, 120, and they put a question mark. Now, yours is to know that land does not depreciate. And if it does not depreciate, whatever value it is at 120 here, it will definitely be 120 even here. So you can see we are even answering the question marks. The examiner does not mean that where there's a question mark, you go and answer, but they know that when you're going to prepare what they have asked you here, you will definitely need these values. Because if you're doing whatever you're going to do, you definitely need to get these values. So yours is to concentrate on what they have asked for here. Then they are telling you that accumulated fund as at 1st January 2021 was 376,075. That. Now, what this means is that
about the question marks.
The question marks are just for you to be able to determine these values, because you will definitely use them in your calculations here. So it doesn't mean that you're going to rewrite this question and answer the question marks. What the examiner is requiring you is here. So when you're doing this information, you will definitely need some of this information. So that is what it's meaning. So it's not that the examiner expects you to put values here. Of course, in your workings, you'll include them, but you're not going to do a separate response and say, question 1, it should be like this, okay? What they require you is this. The examiner putting a question mark is saying, I'm not providing you with this information because I know you know, or I know that you'll be able to compute it yourself. So they're asking us, prepare for Mama Kabete Children's Home for their ended 31st December, a profit and loss. Now, this profit and loss, like I told you, Mama Kabete is a nanny for profit. A nanny for profit, what they prepare for them is income and expenditure. The reason why the examiner has mentioned the profit or loss is because they know that Mama Kabete is holding a bookshop. And that bookshop, we have to prepare for it a statement of profit and loss. Okay? So what I'm going to do is I'm going to come here. Okay, statement of profit and loss. Statement of profit and loss. This is for the bookshop. Remember the heading for statement of profit and loss, we say for the period ending 31st December 2022. So that is my heading. Now, of course, we know that whenever you're preparing your statement of profit and loss for a trading business, which is the bookshop, we usually start with our sales. Okay? We usually start with our sales. I'm going to put my amounts. I'll just leverage on what do I have here. My amounts, the examiner is doing amounts in thousands. So I also just work in thousands, just to be correlate. So I'll put amounts, thousands there. Like that. So I need sales like nothing. So let me go back to my question and look for sales. Now I want you to look critically here. Here, they have given me cash sales. But remember, this entity also has receivables, the people that it sells to on credit. Okay, so I cannot just pick this cash sales. I have to also determine the credit sales, and then I'll combine the two things together. I'll add the two things together. Okay, so now when I look at here, they are telling me cash sales. Definitely, I don't expect to see credit sales here, but what I'm just able to see here is cash from accounts receivables. Okay, that is what I'm able to see. Now, when I look through this information, the other thing that I see that is on could be related to sales are just these balances of 31,500 and 18,200. Now, what does this mean? It means that we are going to leverage on control accounts to determine our sales value. So you can see that control accounts are actually coming into play here. So you're going to see me do my working here. So workings. So for me to determine, because one of the advantages of control accounts is to determine credit sales. So for me to determine credit sales, I'm going to draw up a sales ledger control account. Okay. The sales ledger control accounts is also sometimes they can call it a receivable ledger control account, because receivables are related to sales. So sometimes it can be called that interchangeably. Okay. And I had, as you people confirm, that we went through control accounts. So let me ask just from you here, if you have your account receivable balance, this is the beginning balance, 1st January, and this is the one balance of, which one is debited in the control account and which one is credited of these values? Can we have a volunteer? Somebody was going through control accounts. Which one is debited? Which one is credited?
Hello.
Yes, please.
The opening balance at 1st January is debited.
Okay,
And the closing balance.
Why do we debit?
Being a receivable. Being a receivable, it is opening up the year. The debit side.
Oh, okay. I want you to speak in terms of assets, liabilities, and so on. Them having a normal debit balance. So them being receivables. If they are receivables, what does that mean?
They are assets.
And what happens with assets? What
We have a normal debit balance.
They have a normal debit balance. Okay.
Yes.
Thanks for trying. Is there anyone anyone else with a different answer? Okay, Hajara says we debit the closing balance. Hajara says we debit the closing balance. Anyone else with a different answer to what Hajara says? What about other people? What are they saying?
Hello, may I think also debit the closing balance?
Why?
Because it is an asset, and we say that when assets are reducing, we debit those assets.
So you're saying what are you saying we do? You're saying we debit?
The closing balance.
We debit the closing balance.
Yes.
And then what we do with the with the opening balance?
The opening balance, we credit it.
Why do we credit the opening balance? Eh? Why do we? Why? Maybe let me just go back to the question so that we are able to see. I want us to learn because I know some of you have not gone through contra accounts. So this will be an opportunity for you to learn the dynamics of how these contra accounts work. So accounts, this 31, which is a balance brought forward. Now, in our so-called receivables, somebody says we debit this, and somebody says we credit okay. This, let me call this carried down, and this balance brought down. So our balance I'm right here. Eh? Somebody says we debit this, and then we credit with the other value, which is which is 18,200. Now, this is actually right, okay? This is actually the right approach. Why? Because we know that this is a debtors or accounts receivable contra account. And debtors, of course, have a normal debit balance. Even if this is not a debtors account as the main debtors account, but the way we treat debtors here, we treat them, if it's a balance brought down, it will be debited and this will be credited. Now, remember, when you're balancing off your ledger, okay, if you've done ledgers, if an item has a balance carried down, usually the balance carried down is on the credit side because the balance brought down will be on the debit side in the next period. So that is how it does happen. So it's not by surprise that we are seeing this balance carried down for the period end, because this means that your receivables had a credit balance carried down on the credit and then a balance brought down on the debit side, which is the normal way of how receivables operate. Now, after you've input these balances, I usually ask myself, whatever increases this balance that you've started with is included here. And whatever reduces the opening balance is put on the credit side. So let me ask, if you've started with 31,500 as the people that you demand, your debtors, what could increase this? What could increase this value?
Hey,
What?
credit sales, first and
Yes,
foremost.
brilliant. So credit sales could increase this value, okay? And what could reduce this?
Any payments and the discounts.
True. So any payments would reduce this value. Are we together? Now, yours is to go back to your information. Back to the question that we have at hand, and look out for information that reduces and information that increases, and capture it on the respective sides. So when you come back to our receipts and payments account here, realize something, that we had cash sales, but also had cash from accounts receivables. Now, cash from accounts receivables means that the people we demanded previously are now paying us. So it means that this value is actually going to come here. Is that right? For those that are following? I'm not hearing anyone confirming.
Pardon?
Yes, it's correct.
Okay, it's correct. So we are recording this because it reduces what you've started with, okay? So let me just try to remove this. So you have 64 right there. Now, remember, why we drew up this is actually we want to determine credit sales. But you know, with the control accounts, there are other things that could either increase our balance or reduce our balance. I want you to look at this. This refunds to an accounts receivable. What does this mean? Does it increase your balance or reduce your balance? Any volunteers?
It reduces our balance.
Another one to try, but let me also just explain something.
Increases the balance.
It does what?
Increases the balance.
Okay, let me just try to explain this. If you have somebody you demand, okay, let's say maybe we demand you 100,000. Okay, maybe you are supposed to pay 200,000, but you paid 100,000, so you have a balance of 100,000. And you reach out to us and say, guys, I have a challenge. The money I gave you, the 100,000 I gave you earlier on, I want you to just give me back like a 50,000. Then I'll pay you later on. You get to realize that because you had paid us 100 and you had made with 100, if we are refunding you a 50,000, okay, means that your value is now going to increase. Your balance will now be 150 instead of 100,000. So ideally, a refund increases your balance. So refunds will be recorded on this side. Do we agree?
Yes.
Okay. So refunds will be here. Now, after I've recorded those refunds, our refunds are here. I've recorded them on the debit side, like I was trying to demonstrate. Now, this is the information we have so far in this ledger control account. Now, mine is to go back to my question and look again and see, is there any information that is to do with the receivables, okay, other than what I've been able to pick? Now, when I look at it, I don't seem to see any other information. Now, if I'm comfortable that there's no any other information, definitely if you've looked at the control accounting video, you should be able to know what goes in the control account. And when you see it, you should be able to spot it out. Things like bad debts, things like returns, when suppliers, for example, let me ask, if for example, we had returns, customers returning products, would that increase our value or reduce our value? What would returns do? Any volunteers?
Returns reduce the amount payable.
Returns reduce the amounts. That is one trial. Another one? Definitely, returns do reduce the amount, because if you were demanding me, if I was demanding 31,500 and some customers return some of their goods, then that means that I'm going to reduce my balance. So very good for those that have tried. So after I've exhausted everything that should go in this account, I now come and balance off. Definitely the control account has to balance. The total here has to add up to the total here. As we can see here, we have 82,800. Here we have 33,500. Now, what that means is that the balancing figure is going to give us our credit sales, because credit sales, remember, we don't have a value here. But whenever we have a control account, we shall definitely have, every time we have a sales ledger control account, we shall always have credit sales. So the balancing figure is usually the credit sales. So this same value should actually be the total here. So the difference between my difference between 82,800 minus this is 33,500 gives me 49,300. Are you getting a similar value there? 49,300. So I'll just copy that and put it there. So this is my credit sales. Okay, this is my credit sales. Now this means that my total sales will be this just put it here, will be the cash sales, will be the credit sales. These are credit sales plus the cash sales. And how do I get the cash sales? I go to my receipts and payments and get them. So my receipts and payments had cash sales of 32,500. So that is what I have. Then, so I'll come and record my sales value here. But these figures are in thousands. So I'll record my sales here. I think let me record it in the second column. I'll just remember. Very important to come and put your degree of precision and say, or just on the, you can put it on the heading and say these amounts are in shillings, thousands. It's important for the examiner to know that whatever you're working with here is in thousands. So once I've gotten my sales, remember we do now. We do less returns, sales returns in case they're available, but I didn't see those coming through. So sales returns will not have anything. And then you're able to determine your net sales. So here the net sales remain the same value. Okay. It will remain the same value. Now we move to less cost of sales. The same thing we do with the private businesses. And for cost of sales, we sell opening inventory. Opening inventory. Now, opening inventory, we come to our question. They gave us balances. They told us that opening inventory as at 1st January is 17,900. Now, one thing I want to advise you is that the examiner sometimes interchanges this. Where there's January, it can put December, and January can be this side. So make sure that you first look up here to know which month is it, so to be able to distinguish which one is opening, which one is closing. So this is the opening one. Our opening inventory is that. So I'll just come and include it here. And then we add purchases. Now, purchases. Yours is to ask yourself, did the examiner give me my purchases? Yes, we have a purchases figure here, but, and I want you to listen very well here. This is the receipts and payments. Receipts and payments are like cash books. Now, cash books record only cash purchases and cash sales. The same thing with receipts and payments. So when you see this 45,000 here, you don't jubilate and say, I have the purchases, so I don't have to compute it. No, because you have things like payments to accounts payables. And even when you come to your balances, you have accounts payable values. So it means that this 45 that you have in the receipts and payments are only those purchases that were paid using cash. But that is not all, because you have credit purchases. So what I'm going to do to determine my credit purchases, I'm going to draw up what I'm going to call my purchases control account, or purchases ledger control account. So this one will be called a purchases ledger control account, and this one we call it accounts payable ledger control account. So now that you've gotten an idea from the sales ledger control account, you know very well that when it comes to these balances, of accounts payable, because now here for that account, we use accounts payable. When it comes to these balances, this opening balance will be credited. You just do the reverse of what you did the other side. So I'll just come here and say, this is 1st January 2022. I'll say balance brought down is that value, okay? And I'll now record my balance carried down. I usually record it down because that's how we balance off accounts. We usually record them down. Balance carried down. So balance carried down is 13,500. Okay. So I hope I've written the right figures. Now, the next thing I'll ask myself, what increases my accounts payables? What reduces my accounts payables? So what increases, I'll record it here, and what reduces, I'll record it here. Any volunteers? What increases? Let's a quick one.
Invoices to our suppliers, from our suppliers.
Invoices from our suppliers, and those are credits purchases. There. And what reduces?
Payments to them.
Payments to suppliers. So that is usually your first starting thing. There are also other areas like returns. When you do returns, you now have debit as well, because when you return means that your obligation will reduce, plus more others, refunds and so on. Now,
And this discount received.
pardon on that one?
Discounts received.
Yes, discounts received. When you receive a discount, it means that the obligation will reduce. What you're going to pay will reduce. As you can see, we have discounts received here. In case we had discounts allowed in the sales ledger control account, it would also reduce how much our accounts receivables will pay. So brilliant. Thanks that you're following and you've gone through some of those materials to have this information. So here I'm going to come and I have this value of payments to accounts receivables, to accounts payables, sorry. My suppliers is 26,500. So I'm going to record it accordingly. I'll come here and record it. Now, much likely I don't have the credit purchases because that is why I've drawn up the account anyway. So, but I may also have some information maybe that could affect my accounts payable. So I'll just try to check through and see. Okay. There are no things like refunds that we are receiving from suppliers. So if that is all, I think I'm good to go unless you guys are able to see anything else. But that is what for me I see. And if that is the case, I'll go and balance off my account. So in the same way, this total, this side should balance with this total. This side I have 40,000, this side I have 26,000, which means that my credit purchases will be the difference. So I have 40,000 here, and I should also have 40,000 here, means I'm just going to get the difference. Again, you don't call it balance carried down, you balance off, you bring it, because you already have the balances. So that is why you see these balancing figures actually relate to credit purchases and credit sales for the previous ledger that we saw. So 40 minus 26, this gives us a this is 14,000. I hope you get the same thing when you calculate 14,000. So my credit purchases are 14,000. So it means that my purchases, total purchases, my total purchases will be, the cash purchases and then the credit purchases. So I will have credit purchases here, And then my cash purchases, I'll go to this receipts and payments account. And copy them. I don't have things like returns, but those returns would also affect in case I had them. So when I add this, I get 59. Are you able to get the same thing for that? Okay, I do believe so. So if that is the case, I'll copy. Now, this is working too. This is working. Now it's important that you reference your workings, so that the examiner knows where you have gotten the values. This is working too. So when you come here, make sure that you tell the examiner that this is working, 1, and tell the examiner here and say this is working, 2. So they'll be able to look for the workings and relate your answers. So I'm going to have gotten 59,000. So I'll come and record it here. So you see how we are using control accounts. Very important. I believe this is also helpful for my friend who asked about control accounts. That is Dorothy. Dorothy, are you following?
Yes.
So far, is there any question on what we have done, or you're following? Okay, that is good. So add purchases less closing stock or closing inventory. My days they used to call it stock, but it's inventory. So I'll come and look for my closing inventory. It's 25 days. So I have that there. Okay. So I can determine my cost of sales very well, which is actually going to be, I'm just going to put these figures together and get my 51,400. So I have my sales there. And I now have then I can get my gross profit. So my gross profit is this minus this, which is that value. After I have done that, I'll now go to look at my operating expenses. Less operating. Again, for you to remember that we are now looking at the bookshop. The examiner was bright. They didn't tell you either bookshop or what, but for you, a student of this class, you know that whenever they ask you for profit and loss for a non-for-profit, they want you to do for the book, for the profit business. So now I'll come and look for expenses that relate to the bookshop. So remember, they told you that management apportions expenses between Mama Kabete and the bookshop as follows: salaries and wages, 80% for home and for bookshop. So the first item that I want to look at is salaries and wages. Now, I need to determine what is my value for salaries and wages. So they have given me 6,200. But I know that this was what was paid. Now the question will be, are there any salaries and wages that were not paid? If there are any, I would have had either a prepaid salaries or salaries accrued in this information. So if this is the only salaries information that I have, it means that these are the only salaries that we have. So for the bookshop, remember it is 20% times 6,200. So I'll just come here. This one, I'll not even do a working. I'll just put in bracket and say 20%. Let me use words. 20% of 6,200. So you can calculate 20%. 20%, 0.2 times 6,200. You get 1,240. You get 1,240. Is everyone getting the same? And you agree? Okay. I'll move to the next one. Transport, is it shared as well? Yes, transport is also shared, 80%. So 80% of this transport relates to the bookshop. Again, it's important for you to look and see if there's any adjusting entry for transport, like maybe transport that was not paid for, because whatever is in the here is what was only paid for, but I don't seem to see anything. So 80% of 8,500 . ,80% of 8,500 on your calculators gives us 6,800. So I hope that you also have 6,800. In case you have a different figure, you tell us. So after that, I'll move to, I usually want to follow them like this. Purchases, not expenses. This one, we've utilized it. Now let's look at utilities. Now these utilities, we have 2,500 here. They have told us that the bookshop has 20%. Now these utilities have dynamics. You also have balancing figures. You have prepaid utilities, you have accrued utilities. Now all that information is very important. So what I'm going to do, and I want you to look very, very critically for this. It requires a lot of your attention. So I'll put my utilities there and I'll come to my workings, working 3. Now, since I have many adjusting entries for utilities, I'll need to draw up a utilities account. Utilities account has a debit, has a credit. Now, look what I'm going to do. Now, utilities, prepaid utilities are assets. the balance brought down for prepaid utilities will be on the debit side in that account I've done. So I'll have 1st January 2022, balance brought down, prepaid utilities, I'll record my amount of 1,200. Okay. I hope that you are following. After I have done that, I'll now go and look at, if I had a balance here, this is a dash. If I had the value here, I would put it on the credit side. But since I don't have, I'll move to the next one. Now, accrued utilities. Balance brought down. If I had it, I would put it on the credit side. Opposite side of what I've done by this, because accrued utilities are liabilities. So their opening balance are on the credit side. So I'll put it on the credit side. But then I have a balance carried down. Now this will be put on the debit side. The 2,400 will be on the debit side. Okay. Are we following? Can I hear a yes or no? If we are following, I might be alone.
Yeah, we are following.
Okay. So means that this 2,400, I'm going to copy it and come here. And I say, I usually put it down. It's on the debit side. I said the debit side, if you remember. 3102. This is balance carried down for accrued utilities. 2,400.
It's 31st December, not February.
Okay. Thank you. Now, after I've done this, I also have something also here for utilities. I have these utilities. Now, could somebody tell me where am I going to put these utilities? On the debit or on the credit side? Any quick answer?
On the debit side.
Okay. Says on the debit side, which is actually right. You see, I usually use the example of, let's say, these prepaid utilities. Okay. If you have prepaid 1,200, just like the way it was doing for control ledgers, you're going to ask yourself what will increase what I've paid and what will reduce what have paid. What will increase is more payment. So any more payment that was made, okay? The payment that was made. Now, receipts and payments that we have doesn't have a date, so I'll not put, but the receipts and payments that we have, which is of 2,500, we are saying it will be on the debit side, right there. Okay. Now, and remember, this is a general utilities account. These utilities relate to both. Okay. Now, After you've input all details to do with utilities, the same way you do is come and balance off. Now, before even we balance off, you just ask yourself, what will appear on the credit side? Now, for expense accounts, usually the expense recognized for the period is on the credit side. And why it is in like that? These are prepaid utilities. You just ask yourself, what can reduce my prepaid utilities? Is actually a recognition of the expense for the period. So I'll just put this figure here. I'll just put this figure here and say, you can call it utilities for the year, or utilities recognized. Yeah. So the utilities recognized for the year is actually, it is the 6,100. It's 6,100. Now, those are your total utilities. So you can come here and say distribution of utilities. So we have the children's home, and then we have the bookshop. So the children's home has 80%, well, this has 20%. So this is 80%. Well, this has 20%. Okay. So what means I'm going to multiply 80% times 6,1 that. So 0.8 times 6,100 gives me 4,880. 4,880, and 20% times 6,100 gives me 1,220. So that is what I have. So in my profit and loss, I'll pick this. So I'll come here and say utilities, this value. After I've recorded utilities, I'll now go back to my question and look for the next expense. Now, office expenses, they have told me it's 1,750. I realize that also have adjusting
Yes, sir.
entries on office expenses. Yes, proceed with your question.
I've seen the percentage for utility different there. It is 60. 60.
60 and
Okay.
okay. Thank you. So we can just try to correct that. So this is 60, you're right. 60. Okay, 60 is for bookshop, is that right? And then for children's home, we have 40.
Mm.
Utilities are this. So very good that you were attentive there. So it means that in computation, 0.4 times 4880, okay, times 100 gives us 2440. Gives us 2440, and 60%, 0.6 times 100 gives us 3660. So this is the distribution. Okay, so I'll just copy this and bring here. So that is the right figure. So let's do office expenses. They're telling us 70 and then 30%. But these office expenses also have adjusting entries. So you just run to do the account. And that would be office expenses account. So we have accrued. So since this is accrued, these are liabilities. The balancing figure will be on the credit side. So you come here, say balance, brought down is that. Then this will be on the debit side, the balance carried down. So you say balance carried down is this. What increases, what reduces? Remember we said that anything in the receipts and payments is debited. So I'll just go to my receipts and payments and pick that value that is there. Payments for office expenses is 1750. So I'll just come here, say receipts, payments, that. So I'll look for any other information relating to receipts and payments. In case I don't have it, I'll just proceed to balance of my account. So I get that value and decide I have a less figure, but this account has to balance. So which means that the balancing figure is office expenses recognized, which will be this minus this 1900. Then I also come and do distribution. Of office expenses. Remember we had was it a 70 and 30? 70 and 30. and 30. $70 and 30. Okay. So you now distribute, so it means that this will be 0.7 times 1,900, which gives me that. Then 30%, 0.3 times 1,900 gives me 570. So I'll pick my 570 and bring it here. And call it office expenses. So are we on the right track, friends? Are we following?
We are following, sir.
Okay, that is good. All right, let's finish. So the next thing is look for other expenses. Now depreciation. Remember what they told us about depreciation? They told us 15% of each of these figures. So you just get this depreciation and get 15% of each of them. So you just come here. Can somebody compute and give me the figures? What is 15% of that value?
5,625.
5,625. What about the next one? Right now, you should have calculators ahead of the exam. 7 what?
20.
720. And this one?
$9,000, which is 9.
900.
90.
90.
Yeah.
Okay. I hope all of you get the same figures, those that are also calculating the same figures. Okay, if that is right. Now, the next thing we do is we try out and see if there are also if there are any other expenses relating to this entity. So when you come here, there are also others that don't have additional information. For example, book advert. So this one, I'll take it the way it is. Book advert is automatically for the bookshop and doesn't have any additional information. So I'll just take it away. Sorry, friends, my PC logged me out, but we're saying book adverts, that one we just record it directly because it relates specifically the bookshop. Insurance, we left it out. Club printing and stationery, specifically, it doesn't relate to the bookshop. And that is all from there. There is nothing else here that relates to the bookshop in this. When you look at this information, we've tackled all of it. Membership fees don't relate to the bookshop. This information, we've handled it and doesn't affect our, so I'll proceed to just determine my profit. You can say total operating expenses. When you get summation of this is 22. So it means that the profits will basically be equal to this value minus this value, which gives us 8142, 8145. So I do believe that we're on the right track. Now, the examiner asked us to also draw up an income and expenditure account, and I just want to guide you on this, how to do it. Like I told you, an income and expenditure, definitely you have a heading, Mama Kabete, Children's Home, income and expenditure account. This is for the period ending 31st December 2022. You have your incomes, and then you have your expenses, or you call them expenditures. You also have like, you can just include these zeros, the degree of precision, can include them here. So your role is to just go here and look for the incomes and expenses. Incomes are usually here. Like you can see, volunteers' contribution is this value. Now, usually, if you look at an item here and see if there is any additional information affecting it. If there is no additional information affecting an item, just move it directly into your income and expenditure. So I'll come and record that income here. Doesn't have. You again go back and look at your incomes. These ones, we tackled them. Now, membership fees, these membership fees have adjustments. They've given us information about membership fees, so I'll first jump them. This I'm just guiding you. I'll move to grant income and put it there. And when you have like limited time, maybe you're doing this question as your last question and there is already limited time, you can be able to also do the same. First, consider those things that you're just inputting, because definitely the examiner is going to mark entries. For the time I would take on calculating the membership fees to put here, another person would have already filled up the different incomes. So entrance fees is also an income, and I didn't remember seeing an adjusting entry on them, but you correct me. And then the expenditures are recorded here. Hello. It's okay. Let me come. Okay. Let me come. So friends, I want so you look out for the incomes and expenses, and then we put it accordingly. I'll have to cut this short, and you'll help me to complete it and share your response with the WhatsApp group.